Welcome to Options and Ideas. Provident Fund Fundamental, Challan and Payment presented by Options and Ideas. What is a Provident Fund? A Provident Fund is an investment fund set up to save for long-term goals such as retirement. In India, we have different types of Provident Fund plans for individuals from various categories of employment, such as self-employed, private sector employees, and government employees. What are the different types of Provident Funds in India? You may be eligible for different Provident Funds depending on the nature of your employment. Here is a preview of the common types of Provident Funds available in India. Types of Provident Fund: Statutory Provident Fund, also known as the General Provident Fund, GPF. The Statutory Provident Fund was set up under the Provident Funds Act 1925. It's primarily intended for government employees, accredited educational institutions and universities, the railways, and other specified organizations. Recognized Provident Fund. This type of Provident Fund pertains to employees of private organizations with more than 20 employees. Here, companies and establishments can either set up their own PF trust or they can choose to join an existing government-approved scheme. Unrecognized Provident Fund. In the above case, if the Commissioner of Income Tax, CIT, disapproves of the Provident Fund scheme, it becomes an unrecognized fund. Public Provident Fund. As the name indicates, this Provident Fund is available to the general public. You can invest in the PPF scheme irrespective of the nature of your employment. It means you can invest in PPF if you are salaried, self-employed, or even unemployed for a while, as long as you have the funds to invest. What is an Employees Provident Fund, EPF? You may have heard of EPF or the Employees Provident Fund as a part of your salary discussions at work. It is the most common kind of recognized Provident Fund. Nearly all private sector organizations with 20 or more employees typically enroll in this EPF scheme. For EPF, the rate of returns on the balance in your EPF account depends on the prevailing interest rate. As of March 2023, it is 8.15% per annum. Typically, each month, the employer and the employee contribute equally to the employee's EPF account. The percentage of contributions and the accounts they are directed to are as follows, depending on the employee's salary. Objectives of the Fund: Employee Provident Fund, launched by the Ministry of Labor, has the following objectives. The fund's major objective is to manage the Provident Fund of the government, public and private sector employees, helping them financially in their retirement. Contributions to the fund are made compulsory on part of the employers and employees, leading to mobilization of savings. Favoring its members, the Employee Provident Fund intends to generate maximum returns on the investment. The fund enables its members to conduct research activities and explore certain welfare schemes. EPF focuses on undertaking the activities that ultimately provide social security to the members of the fund. Eligibility: the following eligibility conditions must be met in order to avail the benefits of EPF. Employee must be an active member of the scheme. If the employee is working with a registered organization, she can directly avail the benefits of insurance and pensions since the day she joined the organization. The organization must have a minimum of 20 employees. It must be noted that the scheme does not cater to the employees of Jammu and Kashmir, an erstwhile state. Documents required: the following documents are required to register for an employee PF account. For organizations: name of the company, certificate of registration or incorporation, certificate of the company, partnership deed. In case of partnership firm or LLP, ID, proof of the directors of the company, list of all the directors along with their contact details. Along with the above mentioned documents, all the entities, proprietor, company, society, trust, must have the following documents while applying for registration of PF: bill of the first sale, bill of the first purchase of raw material and machinery, GST certificate, if the organization is registered under GST, name and address of the bankers and the bank, monthly record of the employee, strength register of the salary and wages, all vouchers, balance sheets from day 1 to the current date of provisional coverage date of joining of the employees, along with their father's name and date of birth, salary and PF statement, cross-cancelled check. EPF contribution: if your salary is 15,000 rupees or lower. Here, the contribution will be distributed between the Employees Provident Fund, EPF, and the Employees Pension Scheme, EPS, as follows. Employee contribution to EPF, 12% of salary employer contribution to EPF, 3.67% of salary employer contribution to EPS, 8.33% of salary, up to a ceiling of 15,000 rupees on the salary, i.e. 1,250 rupees. If your salary is more than 15,000 rupees, in this case, the contribution will be distributed between the employee's Provident Fund, EPF, and the employee's pension scheme, EPS, as follows. Employee contribution to EPF, 12% of salary employer contribution to EPF, 3.67% of salary employer contribution to EPS, 1,250 rupees additional employer contribution to EPF, 8.33% of salary, minus 1,250 rupees. EPF Challan. There is a receipt that is generated when the payments are made by an employee. It is important to know about the different aspects of the Challan, as this helps give clarity to you about your payments. It is best to know what the data represents. Establishment code. No. This is the code that is assigned to the company to identify it. It is unique to each establishment and is generally mentioned in the PF account number. Paid by check, cash. This is a bit obvious as it refers to the mode of payment chosen by the employer. Dues for the month of. Here the employer can indicate the month or months for which they are making the payments on behalf of the employer and the employee. Total number of subscribers and total wages due. This will refer to the number of people who have actually signed up for the EPFO scheme. Account 1. Deposits made under A. Circa 1 refer to payments made towards EPF and is inclusive of both employer and employee contributions. Account 10. This is a section where contributions to pension funds are mentioned. Account 21. This is the part that deals with the employee deposit-linked insurance and contributions made towards it. Particulars in the EPF Challan. The particulars are the table where all the various amounts are mentioned in front of the appropriate heading. Employer's share of cont. This is the total amount that the employer is paying for the specified period. Employee's share of cont. This will be the total amount that is being contributed by the employee towards the EPF for the specified period. Admin charges. These are the administration charges for the EPF management. INSPE charges. Inspection charges are those that are levied on contributions made towards the employee deposit-linked insurance scheme. Penal damages. Penal damages refer to any penalties that the employer may have to pay as a result of late remittance of EPF contributions. Missed payments. This will contain the details of any miscellaneous payments that are being paid by the employer for the contributions for the period specified. Who is eligible for an Employee Provident Fund? In India, the following individuals are eligible for the Employee Provident Fund, EPF. Employees earning a basic salary of up to 15,000 rupees per month must contribute to the EPF scheme. However, employees earning more than 15,000 rupees per month can also enroll voluntarily. EPF is mandatory for employees working in specific industries. EPF also applies to all employees in private sector establishments, with 20+ employees, and many public sector undertakings. Benefits. PF. The Employee Provident Fund, EPF, is a scheme that has been put in place to help employees create some savings throughout the duration of their service years. This scheme requires that employees and employers contribute a specific sum towards PF. For the employee, it is not a matter of concern since the employers are tasked with deducting and depositing said amounts in EPF accounts, but if you are an employer, then you will need to know how to understand the receipt that is generated when the payments are made. It may look rather confusing at first glance, but it is actually very easy to understand it. Payment. Even though both employer and the employee are bound to contribute to the PF account, the employer who is registered with the PF Act has to make the payment. Starting September 2015, it has been made mandatory for all the registered employers to make the payment online. The EPF online payment can be made either through the EPF's official website or through the bank's website, if the bank facilitates direct payment through its website. EPFO has currently tied up with the banks for the collection of EPF dues. Process for EPF payment online. Follow the given steps in order to make the EPF payment online. Log in to the EPFO portal using your electronic Challan cum return (ECR) Credentials: check whether the details such as establishment ID, name, address, exemption status, etc. are correct. Go to the Payment option from drop-down list and select ECR Upload. Select Wage Month, Salary Disbursal Rate, the Rate of Contribution, and upload the ECR text file. The uploaded ECR file will then get validated with respect to the predefined conditions. If all the conditions are met, a screen displaying the message, "File validation successful," will appear. If the file is not validated, an error will come up, asking you to correct the ECR text file in the specified format and upload it again after making the required corrections. The TRRN then generated will appear. Click on the Verify option on the page. Process for EPF payment online. Generate the ECR summary sheet by clicking on the Prepare Challan option. Enter the admin inspection charges and click on Generate Challan. After verifying the challan amount, click on Finalize. Click on Pay against the relevant TRRN. Choose the payment mode as online, and then from the drop-down list, select the bank you wish to pay through. Now you will be asked to make a payment on the bank's internet login page through net banking. You will receive your transaction ID and e-payment slip on successful payment. The transaction status will then be updated on the EPFO page and you will receive a confirmation of the payment made against the TRRN number provided by EPFO. However, there are certain banks that have a specific procedure of payment of their own. You can visit the bank's website in order to check the same and make the payment accordingly. Deadlines for EPF payment and EPF return. EPF payment due date is the date by which PF from the employee's salary should be deducted. This should be done on or before the 15th of every next month. However, the due date of PF return and the due date of PF payment are both the same, i.e. on or before the 15th of every month. Late payment penalty in EPF. Upon the late EPF challan payment, the following two penalties are applied: interest for late payment under Section 7Q and interest of 12% per annum for every single day is levied on the employer if she fails to deposit the EPF contribution before the deadline. Penalty for late payment under Section 14B in case of failure of challan payment. The following penalties should be incurred: 5% interest per annum for a delay of up to 2 months, 10% interest per annum for a delay of 2 to 4 months, 15% interest per annum for a delay of 4 to 6 months, 25% interest per annum for a delay of more than 6 months. Conclusion: Provident funds are investment funds for long-term savings, particularly for retirement. In India, various types of provident funds exist based on employment categories, including statutory provident fund, recognized provident fund, unrecognized provident fund, and public provident fund. The most common type is the Employees Provident Fund, EPF, prevalent in private sector organizations. Understanding these funds is essential for effective financial planning and a secure future. Thank you. We are glad you are here. Do like, share and subscribe.